Morning, everybody. And Brenda, I will be joining you at Asia Market Cafe for that roti prata for lunch. Sounds delicious. Thank you very much. Wonderful to have all that variety for us to eat. Look, thank you again for joining the Visa Security Summit. It is a very important annual conference, as Joe has mentioned. It does allow us to share some of our thoughts about some of the most important developments in the industry in payment security with all of you. Because remember that payment security is a shared responsibility. It's a shared responsibility for all of us. Our network, our Visa network, is only as safe as the weakest link. So as parties that are all participants in that ecosystem, we have to always make sure that we're aligned together in our joint mission to make payments as safe and secure as absolutely possible. A lot of you may not know that Visa's corporate strategy actually has 7 pillars. And these pillars guide us in our vision to be the world's best way to pay and be paid. And the foundational pillar of that is what we call champion security. Champion security. So whether it's with partners like yourselves or with all of our consumers and others out there in the network, trust in our system is absolutely paramount. So therefore, it is a very big priority for all of us to fully understand what are the industry trends. Where are we headed? What does the future of payments look like? And how do we better prepare ourselves for that future? So that's my topic today that I wanted to talk to you about. Now, we do have a very large and diverse group here in the room. As Brenda shared with us, we've got over 600 people from different countries, not only in Asia Pacific, but from all around the world. Many of you are longtime partners of Visa, and others may even be thinking about working with Visa somehow in the future. So I did want to start with just introducing a little bit to you about who we are in the region. What does our presence in Asia Pacific look like? So of course, firstly, we're extremely proud through all of our hard work together that Visa is a leader in most of the markets in which we operate in Asia Pacific. We've got 23 offices in 42 markets across the region. And those numbers continue to grow as a lot of countries continue to realize the benefits of electronic payments. And most recently, we opened offices in Myanmar and also Cambodia. We've got more than 900 financial institution partners, 12 million merchant acceptance locations, and we issue close to 1 billion Visa cards in the Asia Pacific region. And this number, which is quite incredible, is the $1.8 trillion of payment volume that was generated in Asia Pacific in the past year. And that is around 1/4 of Visa's total payment volume globally. And a little fun fact for you, $1.8 trillion is about equivalent to the GDP of Canada and just a little bit less than the GDP of Italy. So these are big numbers. These are big numbers, and they're all generated by us collectively in this region. So, over the past 50 years, and it's 50 years that we've been in Asia Pacific. It was 50 years ago that Sumitomo Bank in Japan issued the very first Bank Americard. We've done very, very well in a situation, in a world where we rely on physical cards. But also, we've got to get ready for what we call a cashless and a cardless future. What do those opportunities look like? See this map? Up here, it's a map of the world. I've got a circle on it. Can anyone tell me what that circle represents? Yeah, Asia Pacific. That's a very good answer. It certainly is Asia Pacific. But what you also don't know is that there are more people living inside this circle than there are living outside of it. There are more people living inside this circle than outside of it. That's quite an incredible fact. the speed and the scope of urbanization in Asia and the Pacific is absolutely unprecedented. And in the 30 years between 1980 and 2010, the population just in the cities of our region grew by around 1 billion people. And projections by the UN indicate there'll be another 1 billion people in the region by 2040. And 2018 was also a very important year, or is a very important year, in terms of demographics in the Asia-Pacific region. Because for the very first time, half of our population is going to be living in towns and in cities. That's half the population of Asia-Pacific. And today in the region, we've got 3 of the world's 17 so-called megacities, cities with more than 20 million population, Tokyo, Delhi, and Shanghai. But by 2030, there will be 22 megacities in Asia-Pacific. So, that's big, but what happens to the other half of the region's population that doesn't live in those towns and cities? How can they get benefit from the digital and cashless future that we're all looking to build? The answer to that is what we call universal connectivity. Because today, there's 1.9 billion internet users living in the Asia-Pacific region, and 1.3 billion of those users access the internet via their smartphones. They represent over 50% of mobile devices in our region that are already smartphones, and by 2021, that will be 62%. So no matter how you look at it, the pace of mobile connectivity is going to be outpacing that speed of urbanization that we were talking about. So what this does is present to all of us an amazing opportunity to enable way better commerce experiences for consumers, as well as getting those next billion users that live outside the cities into the financial mainstream. Now, a lot of people could say that we've already reached a saturation point in terms of how many Visa cards could possibly be issued. And some people may suggest also that competition in the industry is about fintechs or other disruptors, big techs, big technology. But from our perspective at Visa, our main competitor to digital payments remains cash and checks in some countries, but it's cash. And Asia Pacific is what we say an $11 trillion market. Why? What's the 11 trillion? That is personal consumption expenditure in this region. That is the size of it. But more than half of that expenditure, personal consumption expenditure, is still done on cash. So the yellow circle in the picture that you see behind me is total personal consumption expenditure in Asia Pacific. The white part of that 55%, 6.1 trillion, is the opportunity. That's still cash, still sitting out there. Talk about a growth industry for all of us. It's amazing. So this is what we still have available to us to be converted to digital electronic payments. Now just have a look over at India over here. You can see 86% of payments in India still remain in cash and check in some form. Looking down to Southeast Asia, 76% is the number. Countries and regions with significant populations remain a huge opportunity for all of us to continue to grow the electronic payments networks. And these are also the markets that will almost certainly are least likely to take the traditional approach to building out an extensive payment infrastructure. Instead, these are the markets that are going to be the adopters of mobile technology and potentially leapfrog the rest of the region. So let's have a look at some little facts about this sort of shift to mobile channels that I was talking about. I mean, there's no question that all of us have become universally connected through mobile phones and smart devices. In fact, 7 out of 10 of everyone in this room, because I know this is a fact, 7 out of 10 of us have made a purchase using our smartphone before. So I'm not even going to get you to bother putting up your hand, because I already know the answer to this. 7 out of 10 have used their smartphone in their lives to make a purchase. And in banking and in payments, the use or the growth in using mobile for financial payments has also been quite amazing. So look up here, in the 1 year between 2015 and 2016, in that 12 months, China had a 230% increase in finance app downloads. That's 6.7 billion downloads, 3 times the growth rate of any other rate of downloads across all apps in the country, apart from gaming. We put gaming outside of that. And actually, 110 billion finance sessions took place around the world, took place globally on finance apps last year. South Korea alone, there were 7 billion sessions. The number of average monthly sessions in the top 10 Australian banking apps exceeded 25 times per month. In Australia, people are going onto their banking app 25 times a month. I mean, these are incredible numbers. In China, WeChat and Alipay have a usage penetration that's 7 times the average of the top 5 banking apps in that country. And we know how big the Chinese banks are. Some quite incredible numbers. But the usage of these payment and banking apps is only going to increase as the number of smartphones in our region grow. And it's going to grow tremendously over the next couple of years. The prediction is that 690 million people are going to be accessing the internet for the first time between now and 2020, and at least half of these are going to come just from Southeast Asia. And very, very importantly, e-commerce is going to outpace traditional bricks and mortar shopping. Again, we see the numbers. We know that for a fact. Again, talking about Southeast Asia is going to have an e-commerce market that exceeds $5 billion by 2025, with the majority of those purchases coming via mobile devices. Now, millennials, that generation we all love, all part of us, many of them here in this room, including myself. Okay, you laughed, that's great. I was just kidding. Millennials as well as Gen Z. Gen Z, what's Gen Z? That's the next generation of consumers that are now starting to join the workforce. I'm sorry, millennials, your time's getting over. There is a generation coming behind you. You're no longer the focus. Gen Z is the next one that we need to be thinking about. They're going to be mobile-first users, because remember, Gen Z is the first generation that has grown up knowing nothing but a world with mobile phones and social media. Since the day they were born, social media has been in existence and they have been using it. This is an incredible phenomenon when you think about it. Now, one very powerful force that is changing our competitive landscape around the world is the rise of big technology, big techs, big tech firms. You can see up here on the screen the map that represents the most dominant players in each region around the world. And actually, it doesn't matter which region you look at, there is a very big player operating there. And these firms are accelerating their hold over global e-commerce through their sheer scale. These big techs, they're incredibly well resourced. They're very innovative and they're able to deploy solutions at scale and sometimes quite rapidly. Now, all of these firms started out as e-commerce platforms, but today they're expanding into new segments. And actually, let's take a look at China, which is a great little example for what's happening in the rest of the world. So in 2005, 13, 14, a lot of us if we call it in the West, heard about something called GAFA, G-A-F-A. What's that? Google, Amazon, Facebook, Apple. We started talking about that. And then, a little while later, we started hearing about the BAT, B-A-T. What's that? Baidu, Ali, Tencent. And then we added an X to that because of Xiaomi in China. Now, we might not use a lot of these acronyms anymore, but these companies remain at the forefront of innovation in China and also rapidly everywhere else. And let's have a look at what these guys have been up to, because some of you might know a couple of these numbers, but when you put it all together, it can be quite astonishing. So they have, the four of these, and this is probably even bigger now, they have a combined market cap of $900 billion US. That's sort of bordering onto $1 trillion US of market cap. And they've been incubating more than 1,000 new ventures over the past decade. They've had an annual growth in excess of 50%. BATs are on a very aggressive global expansion path. So in the past 5 years, they've become active in more than 20 sectors: automotive, retail, logistics, healthcare, many, many more sectors. WeChat, the number is quite incredible, has more than 1 billion users around the world. And Xiaomi overtook Apple in China just 4 years, in just 4 years after it was established. An incredibly rapid growth rate. Very interestingly though, these guys are now market leaders in more than 20 sectors, even though they've got their roots and their origins in marketplaces and search technology, e-commerce, and social communication. So beyond China though, BATS has gained hundreds of millions of new users in international markets. They've gained footholds in the US, in European and Asian markets, because guess what? They've made more than 150 direct overseas investments and acquisitions. It's actually quite mind-boggling when you think about that. And of course, some of us know about some of those acquisitions anecdotally, but when you put it all together, the number's quite astonishing. And they've been able to do that because they've got their ability to meet the expectations of a very increasingly sophisticated customer segment that's looking to be part of that. So I just talked about those sort of the big tech firms in China, but let's have a look at big tech firms everywhere. Because why is big tech able to be so successful? The reason is because cloud computing, customer-facing AI, artificial intelligence, and big data customer analytics are three capabilities that are absolutely fundamental and critical to competitive differentiation for financial institutions, but also any other kind of enterprise institution. But these are domains where the big techs actually have experience that is far deeper than banks. And that's where scale effects, the scale that these big techs can have, can make it very difficult for financial institutions to actually catch up with what they're doing. So what that's resulted in is many banks now actually turning to these big technology firms to provide core functions for them. And I'll just give you a couple of examples of that. The first one, Amazon Web Services. I guarantee there are financial institutions in this room that are using Amazon Web Services. They're providing services to dozens of companies, including startups as well, like Stripe. Artificial intelligence in Brazil, Banco Bradesco, one of the big financial institutions there, their app allows customers to conduct day-to-day banking from Facebook, and it uses those customer data analytics to connect with users. Capital One in the US and Liberty Mutual have got an Amazon, they're using Alexa by Amazon It's a solution that allows their customers to check balances, to pay bills, to track spending through the IoT device that we know as Alexa. There are some really important things happening here. And so these partnerships, they can with big techs, the big tech partnerships can accelerate innovation with banks, but they also pose a risk to banks. What risk do they pose? Well, what if these big techs decide that they want to enter financial services and then compete directly with banks? And I bet that's something that all financial institution boards and senior management teams are thinking about all the time. And in our region, Alibaba and Tencent are the best examples of this, because they're now leading providers of consumer financial services. And that's a striking departure from the bank-led model that we see everywhere else around the world. So just coming back to our model, our payment system model, and I think all of you in this room are very familiar with what we call the four-party model. That's the fundamental basis of the open payment ecosystem. This four-party model, despite all the things that are going on, remains extremely relevant because it underpins our business model for working and collaborating with every single one of you in this room. And I hope that you also have some familiarity, and if you don't, you have an opportunity today to find out more, and tomorrow, about Visa's digital strategy. And that digital strategy involves, we're talking about the future of payments now, involves replacing cards with credentials that can traverse the full range of form factors. But underpinning that strategy that we have, there's a whole range of foundational services and standards. Now notice I've used the word standards because even as an industry leader, Visa can't possibly chart every single path that's there in the future of payments. There are so many different technology and service providers, retailers, banks, and regulators that need to be dealt with, that need to be partnered with. So we act as that network that's connecting so many different parties together. And because of that, it's also our responsibility to drive solutions that work as well for as many partners and as many consumers in as many markets as possible. And we do that in a couple of ways. Most importantly, well actually just as importantly as the others, we partner. We partner with third parties. We partner with third parties like a lot of you in this room today. Because innovation today and the speed of innovation, what's been happening, means that Visa doesn't have to own every single part of that value chain. So ever since Visa opened our network a few years ago and made many of our capabilities available via APIs, we've been able to work with so many more partners in the ecosystem. So we can ensure that anybody who wants to develop better payment experiences has the access to the scale and the reach out that our 3 billion Visa cardholders and 46 million merchants worldwide can provide to them. But we can only achieve this if we provide and maintain a consistent set of standards and principles for security, for reliability, and for interoperability. Now, Visa always advocates a standards-based approach to new innovation so that all stakeholders in the system are able to benefit from that, but also enabling them to participate on a level playing field. We want to promote standards that make it easier for all parties in the payments ecosystem to adopt and then deploy new technologies. So we remain and always will remain device and technology agnostic. It's so important that we support a very broad range of innovation and a broad range of devices throughout our entire network. We will not pick winners and losers. We will remain agnostic. And importantly, today, innovation is coming from everywhere, right? It's not just through all the traditional lines that we thought it used to come from. So we're thinking a lot about the capabilities that we can offer and how our partners, all of us in this room, can leverage them. Now, a good example of this, as you'll see up here on the far right, is the Visa Developer Center. And we launched the Visa Developer Center to give the developer community access to Visa tools via the APIs that we've opened. So by working collaboratively, we can actually shorten development cycles and then bring innovation to customers, to consumers, a lot faster than could ever have been done before. So, as a reminder, coming back sort of to where I started, we've got over 3 billion cards around the world being used every day at 46 million merchant locations. Now, if you said to me, which point of sale device, which POS, which consumer wearable, or which IoT device, or which connected car, which one's going to be the absolute winner in the future, I don't know. I don't think any of us know the answer to that question, but the reality is that doesn't matter. And it doesn't matter because I think we already know what we need to do collectively to get ready for the future of payments. But here's what we know for certain. The 3 billion cards and 46 million merchants out there today are going to grow to more than 30 billion ways to pay and more than 400 million ways to be paid. And we're talking about this happening within the next 5 years. Big data, Internet of Things, artificial intelligence, new ways of paying are going to result in an explosion of payment capabilities, payment credentials over the next 5 years. That's the part of the future that we can be certain about. Thank you very much.